This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Kevin Kelly. Kevin is a co-founder at Delphi Digital, an NYC-based research boutique that provides institutional-grade analysis across the digital asset markets. Hey, welcome to the show, Kevin.
Thanks for having me.
Awesome. Hey, well, just quickly to begin with, why don't you tell us a little bit about Delphi? So you guys are a small team of young guys, I think. So yeah, what's the background here? When did Delphi come together and what was the thinking behind it?
Yeah, it's still a relatively small team, and again, really appreciate you having me on. So the catalyst behind Delphi, just to rewind a bit, we all come from traditional finance backgrounds, and we're basically essentially a research and consulting firm dedicated to the crazy world of crypto and digital assets. And so all of us coming from traditional finance backgrounds, a few of us actually had former lives in equity research. When we started falling down the proverbial crypto rabbit hole, I guess you could say, we were trying to do our own due diligence, trying to do our own research on this space, and simply just didn't find kind of credible research outlet that we would expect to see in, conventional asset classes like the equity market, for example. And so we thought that would be something that we could certainly contribute to this space. We're obviously all very passionate about crypto, and that was basically kind of the genesis behind why we launched Delphi. We wanted to create kind of this best-in-class, premier institutional-grade research shop that, again, when you think about more sophisticated investors or institutions coming into this space, would look to hopefully for cutting edge analysis, being able to kind of cut through the noise and the hype in this sector, because again there is still a lot of noise out there, a lot of really interesting projects, a lot of really promising innovations going on, but again, just having kind of that credible institutional grade research shop for those institutions when they come in was something that we thought that we could provide. So we launched Delphi a little under 18 months ago, and we've been just cranking out research ever since.
And so just talk me through your model then, because I've looked at your website and you have a number of research pieces front facing that anyone can go and have a look. And obviously I'll put a link to that in the show notes. But so your model is you have two subscription tiers, a more general subscription and then a more higher level aimed at, I guess, institutional investors. Mm-hmm. What's the process been like trying to grow and scale your business and grow subscriptions? And has that been an easy journey or a hard journey? Where are we at?
Yeah, it's certainly, wouldn't necessarily call it an easy journey. We've definitely faced our fair share of challenges in growing this business, but it's been really exciting nonetheless. And as you mentioned, we've got, two primary research subscriptions, one called Delphi Insights, which is part of what you get as an institutional subscriber, but it's a little bit more of a watered down version. And then the institutional package is where you get kind of the really in-depth token and project analysis, scenario analysis, valuation models, those types of reports. And we've basically kind of modeled this after, again, as you would imagine, a sell-side equity research shop would be, where we've got not only kind of top-down macro analysis, and that's really kind of what my role has become, on the Delphi team, being kind of our in-house chief market strategist and macro strategist, looking at different sectors, spending a lot of time thinking about, Bitcoin, how it fits into a global macro backdrop, why institutions and really just investors in general, should consider an allocation to this space, what the diversification benefits are. But then we've got, the rest of our team all kind of have their own unique niches where, we've got a couple guys that are really focused on the technology aspect and some that are really good at token economic design. And that institutional package gives you basically access to our entire analyst team, our deep dive token reports, quarterly macro outlooks, analyst calls, kind of all the bells and whistles that the Insights doesn't. But at the same time, we think that we've seen some pretty solid growth on the Insights aspect, because we do things like weekly market commentary and thematic insights and talk about, not only why we think this space is really exciting, but some of the kind of key relevant technological trends that are going on, things that are being debated, just kind of trying to create a comprehensive overview of what we think is most relevant in this space, for anyone who's curious.
Fantastic. So in terms of your role on the team, Kevin, you are the macro guy, right?
I am, yeah.
I want to talk to you today a little bit about what macro means and then get your macro forecast, and then really dive into what's happening at the moment with the coronavirus and the likely impact on the market. So just to start at the beginning, you're an equity strategist at Bloomberg and what's called in the US a chartered financial analyst. Really quickly, just talk me through your background there, and then I'd love to hear from your perspective, your definition of macro and what macro means to you.
Yeah, no, absolutely. So my background was previously a U.S. equity strategist. And basically what that means is was similar to equity research, but basically what my job was to analyze different macro trends, earnings trends within the U.S. equity market and the stock market, and basically try and, forecast and project, what sectors we thought would outperform, where the overall market in general would go. Spend a lot of time focusing on, big U.S. benchmarks like the S&P 500. Originally actually coming out of undergrad, I thought that I wanted to go into some type of, an investment focused role or an equity research role. And the more I kind of got into it, I really, kind of found my stride, I guess you could say, within the macro space because, macro, if you ask, 10 different macro strategists, I'm sure you'll get 10 different answers on what it means to them. But for me, it's always it's a constantly, changing global narrative in terms of having to understand how the global economy operates, which countries are, the largest exporters or importers of certain goods, what monetary policy means to, interest rates and what that potentially could mean to, the availability of credit and how that fuels business cycles. And there's so many different things that go into, understanding what the macro, the economy looks like from a macroeconomic standpoint. I've really been fascinated just because it's always new. It's always changing, different asset classes. Some days stocks are outperforming, some years stocks are outperforming for various reasons, and then you have these kind of risk off moments where people flood into safe haven assets like gold or U.S. Treasury bonds and things of that nature. And so really kind of trying to forecast where you think the health of the global economy is going, which regions are going to outperform, and why, I think are really, really interesting topic areas that I'm constantly trying to keep a pulse on. I'm trying to formulate my own outlooks for, but it's always a kind of a constantly changing game.
It certainly is. And all of us here who are participating, observing or driving or building in the digital asset markets, keeping an eye and understanding what is happening in the macro picture is absolutely crucial. And I think, for the last 18 months, 2 years or so even, a lot of the macro guys, both the sort of the young, more digital asset specialists such as yourself, and then some of the older, more traditional guys, I'm thinking guys like Raoul Pal, for example, a lot of the macro guys have been beating the drum in terms of talking about, an overcooked stock market, the quantitative easing, and just all these kind of macro indicators that have been starting to point to the danger zone, right? And now it looks like, of all things, we've got the coronavirus, and that is looking like it could just shape up to be a tipping point that could trigger the whole shebang. So how should we dive in here? What's your high-level take on what's happening?
Yeah, no, I mean, it's a great question. And just to back up a bit, you mentioned some of the global macro funds and strategists that are now actually starting to take notice. And when I say now, I mean over the last couple of years, as you mentioned. And it's really, no surprise in hindsight, just because, again, what actually attracted me most to Bitcoin way back in 2013, and unfortunately, hindsight being 2020, I didn't buy back in 2013. So I've been kicking myself ever since. But nonetheless, what attracted me to it was more so from, a global macro landscape. And it was just a very unique value proposition that something like Bitcoin could offer. And I'd never been, a huge gold bug, and I understand the portfolio allocation benefits of it for sure. But at the same time, I thought something like Bitcoin, again, that takes kind of that scarcity narrative from something like gold, physical gold, and really just iterates on top of it, with, obviously the underlying blockchain technology, and allowing for things, like a true, digitally native, non-sovereign, potential store of value long term, was something, again, from a macro perspective, I was really attracted to. So that's actually what first kind of caught my eye about, this space.
Yes, well, I'm a bit like you, Kevin, and I think it's the same for a lot of people. When people first discover Bitcoin, they don't necessarily buy Bitcoin that first time around. But then when they start to truly understand Bitcoin's real value proposition and what digital scarcity is all about, that's when they really go down the rabbit hole for good. But keep going. I really want to hear your take on the macro view right now.
To kind of fast forward to where we are today and kind of how, I'm looking at Bitcoin and crypto more broadly within this backdrop. As you mentioned, the last 18 months or so, really after a pretty big sell-off, not only in the crypto markets, but also risk assets in general back in Q4 2018, it's pretty much been, what I've deemed as the everything rally. If you look at 2019, you had pretty much across the board, every asset class was up, whether it was, U.S. equities, international equities, even emerging markets were coming back a bit. U.S. Treasury bonds were up double digits in percentage terms. Gold was up double digits percentage terms. So you had a lot of these asset classes that historically you would look at as, portfolio diversifiers or ones that would have, negative correlations with each other. Pretty much the entire market, all asset prices were rising last year. And so one of the really big catalysts for that, and if not the primary catalyst for that, was this kind of pivot among global central banks, starting with the Fed and Jerome Powell, who's the Fed chair. They call the Powell pivot, where, as we started to see some uncertainty creep in and then a sell-off at the end of 2018, the Fed basically came out and early 2019, essentially started giving some signals to the market that, they were prepared to cut interest rates, potentially even offer some monetary stimulus if necessary, if things got really bad. And so markets, oftentimes trade off, expectations. It's really important to understand what's kind of, baked into market expectations, what the consensus is. And then when new information arises, you can kind of, in hindsight, piece together how or why markets trade the way they do. And so one of the big kind of catalysts in 2019, again, was this pivot towards more accommodative monetary policy, starting with the Fed. But, eventually you had the ECB, you had the PBOC, which is the People's Bank of China. The Bank of Japan has continued to just, pump money into its economy, really for the better part of this last decade. So this move towards, easier monetary policy gave a bid to not only stocks, because, historically they've done well as interest rates drop. Stocks certainly become, a bit more attractive just on a relative basis, because now you're not getting as much yield on some of these bonds. But at the same time, if you buy into, this long-term rising risk of what I like to consider, broad-based currency devaluation, and that's across not only just, developing markets, but advanced economies as well, like the U.S., that gives, a bid to something like gold and even Bitcoin, right? So there's this kind of perfect storm last year that resulted in, this everything rally, and it really kind of kept pace all the way up until about, Q3 of 2019. You started to see Bitcoin, gold, some other safe havens start to fall. Stocks continued to rip higher. And then, things were starting to come back. And you saw the beginning of 2020, the last 6 weeks or so up until, really the last week now, you saw kind of a replay where pretty much everything was up across the board again. There was a bit more dispersion, but for the most part, it was kind of looking like a similar replay to what we saw last year. And then, bam, we got hit with, coronavirus concerns. And what one of the things I've been trying to do, and we've been keeping pace modestly with this for the last few weeks now, putting it into our weekly market commentaries, talking about the potential effects. But again, up until recently, it was very, and still is, pretty blurry in terms of what the outlook for this or the potential fallout will be. But nonetheless, I think you had two really interesting kind of dynamics going on, or narratives that were being told in the market. And one was stocks continued to rise pretty much up until, the beginning of this week, right, despite a lot of the coronavirus fears. And that, I think, was just a lot of equity holders basically saying, we don't think that, coronavirus, we think this is probably overblown. Yes, it might hit demand in the short run, but maybe we're just kind of shifting the demand curve, out a few quarters, and it's not going to have this long-term detrimental effects to the global economy. And so in that type of, optimistic environment, stocks, would perform relatively well because it's not going to eat into things like, revenue and sales and profits and profit margins, things of that nature on a fundamental basis. And on the flip side, you had the bond market essentially saying the exact opposite, right? With the yields really, really plummeting, basically starting to price in, Fed rate cuts and that the Fed would come to the rescue as things with the coronavirus started to escalate and that fallout escalated. And so what we saw at the beginning of what we're now seeing, the first couple of days of this week, is the stock market kind of playing some catch up to, some of the news that's come out and the really kind of exponential growth that we've seen within coronavirus outbreak. I think stocks and investors are now starting to kind of wake up to what the potential fallouts could be. And they certainly could have massive implications, right? It's still very early on to try and, forecast what you think the hit to global GDP would be or something like that. But I think one thing for certain is that a lot of people kind of underestimated, what the potential effects of this could be and probably are still underestimating it. It's certainly a really interesting time, to say the least, to be a global macro strategist.
Exactly right, Kevin. And back in January, one of the first papers to be published on the coronavirus, and I believe it is still one of the most relevant today. And that was a one-page paper by Nassim Nicholas Taleb, who of course is a well-known statistician and risk analyst and best known for writing books like Black Swan, Anti-Fragile and Skin in the Game, which are all fairly fundamental books for a lot of crypto market participants, of course. And that one page, I don't know if you've read it, Kevin, it was called Systemic Risk of Pandemic via Novel Pathogens, Coronavirus, a Note. And this was published, as I say, back in January when the coronavirus was, from most analysis perspectives, still located only in a very small part of China and Wuhan. Taleb's essential message in this paper was, when confronted with a highly contagious virus, it is better to panic early rather than panic late. It's better to put all resources around containment as early as possible, even if that involves some short-term sacrifice for the long-term greater good. And the conclusion of his paper was fairly dystopian. He basically said that even while this particular coronavirus may not wipe out humanity, on a long enough timeline, given the connectivity of the world today, it's inevitable that one of these viruses will wipe out a significant portion of the human race, if not all of us. So look, that's not going to happen this time around, but clearly people underestimate what the impact of these type of black swan events can be, right?
No, absolutely. And I think part of it too is, if you look at how even the news flow around this has developed since, I think the first case that was really officially documented was end of December, but then really early January. I mean, you still had the World Health Organization, the WHO, coming out and kind of downplaying, the effects of it. And again, you can make the arguments that, there was some negligence there or what have you. But the fact of the matter is, right from the start, certainly the fact that it took place in China and that's where the outbreak was centered around, it was certainly unfortunate the way in which those events and that news flow developed, because again, to this day, you still have a lot of people who are questioning whether or not the statistics that we're seeing in terms of the amount of documented cases and the spread of this is accurate or not, right? And I think that's actually a really key kind of component to all of this, is that the moment that people start to lose faith in their governments or the institutions that are governing them and the regulatory bodies that are supposed to be there and have their best interests at heart, are, withholding information from them, you could see, certain situations where people potentially take things into their own hands, or, you have this widespread panic where, again, it's not to say that we're downplaying the effects of this or that it's not something that's critically important, but the more people worry about it, the more panic spreads. It can be very, very viral in that sense as well, which can have certainly, major ramifications for the global economy. So no, I think, by definition, black swans, people often underestimate the risk of them because, it's something that really, really kind of come out of nowhere.
Certainly can. And you said that panic can go viral, and that's exactly right. And panic can go viral. And of course, the virus itself is going viral. So back in December, certainly it was only in China. And then possibly in January. No one really knows exactly when it was starting to spread, but I think a week ago it was in 26 countries, and as we record today, it is in, depending on what source you believe, it's somewhere between 40 and 46 countries. And so I think that makes it fairly clear that, the World Health Organization were talking about this window of containment and how that window was closing. I think it's reasonably clear to say now that window has closed. So we're kind of at this precarious tipping point where countries can put travel bans on places, and China was essentially shut down their supply chains and those massive factories for a certain period of time. But there becomes a tipping point where, is it worth it to bring on this short-term economic pain to try and contain the virus when, if it's growing in your countries already, the travel bans and the supply chain disruption is just putting more pain into the system. But it's really hard for governments to make those kind of decisions in this climate of uncertainty when no one really knows which data to trust, right? It's a hard one.
Right. And at the end of the day, it's one of those decisions, too, to your point, that regardless of what choice they make, there's no real right situation here where you make everybody happy, right? Because there are going to be some people, one of the things, kicking the can a little bit down the road, and this gets a little bit longer term, assuming that things do continue to escalate. But one of the things that, are one of my biggest concerns, I guess you could say, is if you just look at the U.S. here, and this isn't just necessarily a U.S. problem, but I think it's a really good kind of case study or example where things could go awry, or we could see some serious knock-on effects that are a bit more indirect to this in the sense that one of the big kind of growing systemic risks to not only, the equity markets and the markets in the U.S., but really just kind of global economy in general, I think, is the rise in debt levels, right? And we talk about, public debt levels, like government debt levels. But when you look at the kind of corporate bond space within the U.S., the amount of corporate debt that's been issued really over the last cycle or so with, record low interest rates and all these different, not necessarily different products, but products that have really come to prominence in terms of, covenant light loans and leverage loans and basically a lot of protections that have been removed for some of this corporate debt. What is really interesting is that, or potentially damaging, is that if you think about the supply chain disruptions, and if, this really does, the coronavirus really does escalate and really does start to hit, aggregate demand for a lot of these products, just because how, globally connected and interconnected the world is now, and a lot of these companies are, especially these big multinationals, these supply chain disruptions could actually have a really, really detrimental effect in that if that really starts to, take a hit to international sales and starts to eat into the profitability of some of these companies, especially the ones that are very, very leveraged up, you could see a kind of a cascade effect where these companies are no longer able to service that debt. And again, even if it's just a short-term kind of transitory timeline that the government puts in place, a lot of the creditors for these different companies and the ones who are actually lending them money, may not see it that way. And so what you could get is this downward spiral of whether it's corporate bond downgrades or even credit markets tightening up or at a very extreme freezing. And so I think that's kind of the long-term or the longer-term knock-on effect that worries me most about kind of causing a global recession here. And at that point, it doesn't matter what it is that triggers it. As you have fear and panic spread, if the credit markets really start to freeze up, especially given how driven the global economy is by, it's a debt-driven economy. If you do have credit markets, tighten and freeze up, and people aren't able to get that, readily accessible or readily access credit, that's going to be a major, major implication because, again, that's where you really start to see some of these trickle down effects. And I think that's where this ends in something that's, a really kind of catastrophic global recession. And it's not something that's just kind of a blip on the radar screen.
Yes, Kevin, I think you're exactly right. And look, it's just such an interesting time, right? I always say, 2020, it sounds like we're living in the future, and there's all these macro events that are just sort of coming to create what you'd call an inflection point, I guess. And I love this idea of the inflection point in the everything rally that you've talked about. And so what's the backdrop here then? We've got, obviously, the US election is coming up in 2020. We've got the Bitcoin halving coming up in 2020. So the halving is in May. The election is later this year. And Trump is obviously going to do everything he can to try and keep the economy from jumping off a cliff. He wants to keep the stock market rally going. Can he do that? I don't know. It's a tough one. I want to get your thoughts, Kevin, on what you think will happen in terms of the election and also in terms of what the effects are for the crypto asset markets and how the Bitcoin halving plays into all of this. These are big questions. How do you want to tackle it?
Yeah, no, they certainly are. And I think, when it comes to the election specifically, I mean, the odds, again, if you look at any, gambling sites or websites that kind of track the odds, the presidential odds for these things, I mean, you've got Bernie Sanders is, pretty much the front runner at this point for the Democratic nomination. Going up against Trump, again, I don't have a lot of confidence, to be quite frank, that he'd be able to defeat somebody like Trump. And so if you do have another, 4 years of President Trump, even if actually you did have, some Democrat surprise and really upset him, I think what's important is if you look at the different policies, right, where we're at a point, and this inflection point that I've been referring to is we're at a point where, debt is becoming, again, as I just mentioned, more and more a core theme of fueling the global economy, right? Especially in some of our, larger, more advanced economies where you have, aging demographics and really kind of struggling to try. Europe's a great example, really kind of trying to struggle to get growth off the ground, any type of inflation off the ground. And so the more and more kind of debt you pump into the system, and the less productive it is, that's where I think, this potentially becomes, an inflection point because, again, some of these spending programs that you hear, the Democratic potential nominees talking about, I mean, you can't just come out and continue to print, $1 trillion deficits or even, larger deficits than that indefinitely, because eventually, the fact that the U.S. has so many foreign holders of their debt, right? Different central banks, different foreign institutions, governments holding actually U.S. Treasury bonds and notes. The moment that people lose confidence in, the U.S.'s ability to eventually repay that, right? Because eventually it's going to get to a point where it's just absolutely unsustainable. It's all a confidence game. And that's the moment where I think things start to shift and you start to move away from the dollar being a global reserve currency. And that obviously has a ton of potential, negative and spin-off effects. And so, I think in the short term leading up to the election, you certainly could see some market volatility. The markets, as sad as it is, probably perform pretty well if Trump looks like he's out in front and is going to get reelected, which is, at this point kind of how it seems. But I think longer term, the policies that a lot of people are putting in place, I mean, if Trump does another 4 years, deficits are still going to be, running at $1 trillion rate at least. Those are the types of things that I look for because I think, we are getting to a certain point, and a lot of the Bitcoin and crypto movement is really addressing these points, and people are trying to wake up to the fact that, on the fiscal side, we're basically just continuing to, issue different government bonds to fund some of these things and running these big deficits. And then on the flip side, you've got, the Federal Reserve that's essentially buying up, that newly issued debt and kind of monetizing the debt. And this is where you get things like modern monetary theory, MMT, all of this kind of combines into this really interesting, perfect storm for something like Bitcoin or digitally scarce assets to perform well, because we are getting to a point where I think, the age of abundance is really going to start to catch up with, not only lawmakers and policymakers, but really kind of your everyday average citizen.
Absolutely. So let's go to a very quick break then, Kevin, and then we'll come back and I'll just briefly get your thoughts on the Bitcoin halving, the stock to flow model, even perhaps a Web 3.0. We'll be back in 30 seconds.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, Kevin, let's put you on the spot. So, of course, the Bitcoin halving is going to happen in May this year. What's your take on the Bitcoin halving? What do you guys tell your clients? Is there anything we can extrapolate out from the price performance data that we've seen in the previous two Bitcoin halving events? What do you expect to see?
Yeah, unfortunately, I hate to disappoint, but what we've told clients is cautionarily that we quite frankly don't know exactly what will happen. And the reason that we say that, and we have, obviously our opinions on which side of that argument we fall on, because it is very highly debated right now. But the fact that you only have, a couple prior examples of this, and the fact that, Bitcoin itself only has, a 10-year history, and even shorter than that on a trading history basis, there isn't a ton of kind of statistically significant things you can pull out of prior examples of this, right? Even though in previous examples, it has been a pretty bullish catalyst for Bitcoin's price. I think what is interesting though is what we try and track is the sentiment around Bitcoin halving, even looking at things like Google Trends and searches and seeing how many people are actually getting interested in this. It certainly could have a lot of reflexivity if, the narrative catches hold. I mean, markets, investing, it's all about narratives. If the narrative that Bitcoin, is going to take off or pump up after, the halving event, here in May. If that narrative really does take hold, then you could certainly see people FOMO into it, or at least trying to build positions beforehand to take advantage of it. And that by nature, just kind of that reflexivity could certainly push Bitcoin's price up. So we're doing a little bit more work on that actually now for our next monthly outlook. And we're looking at that and kind of the long-term sustainability of Bitcoin's monetary policy and its model. But unfortunately, in the short term, the halving, I mean, it's certainly something to watch for. And I think the market dynamics now are very different than they were, 4 years ago, or clearly, obviously, a decade ago. In the fact that you really don't have a ton of history to go off of. So, long story short, not entirely sure what will happen, but I think watching the narratives and watching sentiment is going to be really important going forward, especially as we get into to March here, and you really start to get the clock countdown coming in. I think, sentiment's going to be a pretty big driver. And then whichever way sentiment kind of goes could also, kind of push Bitcoin's price, at least, in the near term.
Yes, I think that is well said, Kevin. What about the stock to flow model? Does your team have any thoughts on that? That's more of a quant-based approach to analyzing a Bitcoin. Has been slightly controversial, but again, it's as you say, it is really all about narratives, and the stock to flow narrative is, it's a big one in Bitcoin right now, isn't it?
Yeah, and yeah, it's another one of those cases where, first off, I mean, just love to see that, people are trying to pioneer new ways to value, Bitcoin and crypto assets more broadly, by looking at different things or creating these different models. Stock to flow, yes, to your point, has been very controversial, and it's not, an indicator that we put, a ton of emphasis on, especially in isolation. But I think what it does, a decently good job of is reminding people, what the attributes, one of the key attributes of Bitcoin and why we think it long term will have value. Again, in this kind of age of abundance, and you talk about digital scarcity, as you go past the halving events and the amount of Bitcoin being amount of Bitcoin supply that emission rate of that issuance rate continues to decline. Even in its closest comparison, something like gold, there are still certain years where gold supply increases by more, especially when gold prices rise. You kind of do get a little bit of that mining effect. Sometimes it becomes more profitable to mine in different areas, and so it's not a perfectly there's still a bit of a supply side dynamic there. Certainly not anything like a debt issuance or equity issuance for other asset classes, but Bitcoin itself, the fact that we actually know, and can forecast out, 100 years what its supply is going to be and what that issuance rate is, I think is something that's really important to continue to go back on and continue to harp on, because it is a really kind of core crux to what we think the long-term value proposition of a digitally scarce asset like that would be.
Yes, and you mentioned, Kevin, that you and your team are working on some modeling that looks at Bitcoin's value proposition well into the future. And I I guess maybe you're talking about what happens when all Bitcoins are released into the system, and then of course, the model has to switch to transaction fees only, and is that sustainable? And so that's one long-term narrative that everyone will have to keep an eye on. The other one, which I guess is more short to medium term in my mind, is this idea around the energy footprint that comes from Bitcoin's proof of work. I think there's a worry there and a potential existential threat to Bitcoin's brand, simply because one of the narratives that will become increasingly important this decade is the green movement, the climate change movement, what Tesla are doing with EVs. And I think Tesla are a really good example here. I've talked about this before, but 10 years ago or 15 years ago when Tesla were founded, and no one took Tesla seriously for the first 10 years. And then now the market has come around quite quickly, I think, to Tesla's way of viewing the world. So my point here is, if Bitcoin cannot at least paint a picture or create a narrative that most proof of work mining is done on renewable energy, is there a threat to Bitcoin's brand here?
Yeah, no, I certainly think there could be, and I'll be the first to say that, no expert on alternative energy, but it is actually one of those things or those topic areas that we're starting to do a little bit more work on, just because, again, trying to understand from a kind of a power efficiency standpoint what some of those potential alternative sources of power could be longer term when it comes to something like Bitcoin mining. But yeah, I think, to your point, you're seeing this across, just general investing, this movement of, not only just millennials leading it, but you have increased emphasis on things like ESG, right? Environmental, social, and governance companies, and trying to figure out how you can actually outline the ways in which companies are being, more green versus others. And that's obviously sector dependent and things like that. But to your point, long story short, I think the focus on sustainability, especially in a world where people are really starting to wake up again to things like climate change and how urgent I think it is that we have to act on things like that. It certainly could be, a risk to Bitcoin's brand. At the end of the day, as tough as it sounds, a lot of the beauty of Bitcoin and then, really other crypto assets and some of their token economic designs is that, the reputation aside, if the monetary incentives are aligned correctly, and if you do provide enough of a monetary incentive for people to do things, it doesn't necessarily mean that the security aspect of Bitcoin will be sacrificed, even if its brand, is a bit, right? And again, you can get into that reflexive argument about price and what price, could mean to miners and the security aspect. But I think, again, if as long as, miners are incentivized enough to go out and it's profitable for them to do so, I think, the long-term, security of Bitcoin, or I should say, the intermediate term, if we're looking out the next 10 years, is safe from, potentially some of that brand damage that could happen.
Yes, well, we'll just have to see what happens, but I think that's going to be absolutely fascinating to watch all this play out. And look, I just wanted to touch briefly on DeFi, decentralized finance, and even this slow transition to Web 3.0, which is also happening in the background as these, exponential technology trends begin to converge. So I know you guys at Delphi, you keep a close eye on Ethereum and DeFi, and presumably these are the building blocks of Web 3.0. Been an interesting time in DeFi with the BZX exploits or clever trades, however you want to characterize that. What's your team watching in the Web 3.0 space?
Again, depending on how you want to slice and dice it, what's, I think, beautiful about this space too is that, again, if the incentives are aligned and someone's able to take advantage of the system, again, it's not large enough right now that it creates these really systemic risks. And at the end of the day, some of these, again, however you want to trade, we'll chalk it up to clever trading, right, or just kind of exploiting certain holes. I think it does make the system actually, a lot stronger, and people go back in and patch up those different ways in which people can exploit that. And so that is the beauty of the space, and it being still, pretty nascent and kind of in its testing phase, I guess you could say. Not to say that there isn't, real value being locked up in things like DeFi, but again, it's nothing or pales in comparison to what you see in the traditional financial markets and financial services. But for me, again, sitting in a more macro perspective, this idea of a parallel financial system that's not only more efficient but also can be more equitable is really interesting. And the Web3 from a macro perspective is something I've been trying to put a lot more thought and work into recently, because I think when you think about some of the largest polarizing trends that are facing again not only the U.S. but the world at large today, if you think about things like income or wealth inequality. I mean, the fact that, you have some of the 5 largest companies on the planet, and to name a few, like Amazon, Google, Facebook. I mean, Google and Facebook just alone, when you think about the amount of kind of market power that they command right now, and the amount of access and data accessibility that they have to user information, it's astonishing, right? And again, I've always been a big believer in capitalism, and I think Web3 almost can develop in a decently similar way, in that you can actually create or disintermediate some of those giants and really actually give back not only data ownership to people, but also abilities to earn, supplementary income in really unique ways, right? And so what I mean by that, and where this ties into those larger macro themes is, if you're able to create basically, for lack of a better word, we'll call it the decentralized Google of the world, right? But you as a user are able to actually, have access to your data and basically privilege, whether it's different companies, different projects, maybe it's an AI company that wants access to your data, somebody who's working on natural language processing, whatever it may be. These large data companies like Google and Facebook actually, sell your data to in the background. If you actually had ownership over that, well, yes, that's great. And I think privacy is going to be, a big push here, but I don't necessarily think it's going to be the catalyst that gets this mass adoption, this mass movement to, Web3 applications. I think, again, the monetary incentives could be the things that really push people over the edge, right? And so if you think about this decentralized, Google type world, if you're able to take your data and monetize that, well, now, I mean, the future of work gets really interesting, right? Because if you're able to start providing, supply side resources or computing power to, these different decentralized networks, you're also able to, earn some supplementary income from distributing your data on things that you do. Well, then, obviously that can start to help. At least help, narrow that income and wealth inequality gap, because a lot of just kind of market power right now is very, very concentrated. And I think, this decentralized movement is something that, just has too much momentum at this point. There's gonna be too many people behind it. And once they actually see, the real kind of tangible benefits, I think, it is going to be something that eventually we get some real acceleration on. But right now it's still, again, very much in kind of testing phase. And it's a lot of, crypto enthusiasts who are testing and playing with these different things, even these different DeFi applications. And I think, we do need, some kind of step function jump or something that's a real kind of driver catalyst to bring your non-crypto, your people who aren't, native to crypto into, this new decentralized world.
Absolutely fascinating, Kevin. Yes, all this is just starting to happen at the moment. And I think, people are building the tools that are going to allow people to, as you say, monetize their data, monetize their attention, monetize their hard disk space, whatever it is. People are going to have the tools to create value for themselves as individuals using these tools, and go out and create new kinds of communities in these shared digital spaces. It's obviously already happening. Yeah, the metaverse is slowly but surely, the building blocks are coming to life, and people are starting to imagine this crazy new world, right?
Absolutely. I couldn't be more excited.
Awesome. Well, let's go to another quick break, and then we'll come back and we'll finish off with the very famous Crypto Conversation Hot Take Round.
Hey there, you Crypto Conversation fans. My name is Brian Krogsgaard, and in combination with Josh Olszewicz, we record LedgerCast, a weekly podcast all about cryptocurrency trading. It's a little different than what Andy's got going on here with the Crypto Conversation podcast, where he's interviewing folks, and we think that you would enjoy it if you like this. It's also brought to you in partnership with Brave New Coin, and I hope to see you soon. Just go to ledgerstatus.com to check it out, or search for it on your favorite podcast player.
All right, and we're back, and I am with Kevin Kelly. Kevin is one of the founders at Delphi Digital. Kevin, I like to finish each Crypto Conversation podcast with a very quick round of Crypto Conversation hot takes. Are you up for it?
I am absolutely up for it. Let's do it.
I just want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
If 1 is Bitcoin maximalist and 10 is multi-coin, I probably sit right around a 3.5.
Very nice. Kevin, what would you say is your firmest conviction crypto opinion?
Probably when it comes to Bitcoin, I think honestly its long-term narrative as a potential non-sovereign digitally native store of value is strong enough that it's going to really get not only institutional investors but people all around the world interested and involved.
Very much agree. It is a no-brainer. All right, Kevin, I ask every guest this question. We're getting closer. Who wins the American presidential election 2020?
Trump, unfortunately.
A lot of people say that. A lot of people think that, and it is looking a little bit like that. I ask every guest this question as well, and look, it's less relevant now as Andrew Yang has dropped out of the race, but I think it does speak to what we were talking about before with the wealth inequality. UBI as a potential fix for AI-induced automation. What do you think of the debate around UBI?
I think, in short, it's an interesting proposal, but I think we need to attack the root of the problem and not necessarily, default to something like UBI.
Yeah, that's very, very concisely said, Kevin. All right, well, Bill Gates famously said, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does the blockchain space look like in 10 years' time?
In 10 years, I think you do see a bit of consolidation. I think in general, market values, if you want to call it market cap of the entire crypto space, is certainly a lot more valuable. But I think you just start to see some consolidation around some of these smart contract platforms. Some narratives really start to disperse and break out a bit. And I think a lot of people will really start to focus on, the security of these base layer protocols, especially when you're talking about things like DeFi and talking about people's money and well-being.
Similarly, William Gibson, the sci-fi author, he famously said, the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
The future being here, but it's not evenly distributed. That's a really good one. It might be a little bit of a corny response, but going back to the idea of decentralized networks, I think you're seeing these in practice. People, now you and I can provide supply side resources to these types of things like computing power. I think that really is going to change the face of what the future of work looks like, and it's a world in which people can get paid to do today. So I think the future is here, even though it's at least underrated or not even really well known about.
I always think of Elon Musk, who is one of these guys who is out there pushing hard for the future. What's your hot take on Tesla? Are you a long-term bull, long-term bear?
I'm a long-term bull on the industry and the space, and I'm a huge long-term bull on Elon Musk. To be honest, my opinion of him, I'll sit neutral on the stock, but my opinion of Elon is absolute visionary genius, but I don't think he has any business being CEO or running a public company.
Nicely said. This has been a lot of fun, Kevin. Finally, what is your favorite science fiction book, film, show, or universe?
Probably, I've actually mentioned this on podcasts before, but I read this book, years ago, probably over a decade ago, called Transall Saga, and it was just this really interesting tale of, kind of parallel worlds, and that was one that always just kind of stuck with me. And to be honest with you, to this day, I can't remember who the author was, but I remember the title Transall Saga just really stuck with me.
Well, I'm not familiar, but I'm going to look that up, and if I find it, I will put it in the show notes. Thank you so much for talking to me today, Kevin. The microphone is yours. Take us out. Tell the people where they can find you on your various platforms and where they can go to dig into Delphi.
Absolutely. Really appreciate it. Well, you can find, our firm at delphidigital.io. You can also find our company on Twitter, just Delphi_digital. Myself, I am Kevin _ Kelly _ Roman numeral 2. It's just 2 I's. And we're across, Twitter, all my partners, myself, our company, Twitter, LinkedIn. Hit us up on our team email, team@delphidigital.io. We're always looking to talk with people, especially those who are interested in investing and just talking crypto markets. So definitely hit us up.
Awesome. Thanks, Kevin.
Thank you very much. Appreciate it.
Boom. Well, there you go. I hope you enjoyed that chat with Kevin Kelly from Delphi Digital. Now, I did find that book that Kevin mentioned. It's called The Transall Saga by Gary Paulson. A link to that is in the show notes. Also, I've put a link in the show notes to that one-pager by Nassim Nicholas Taleb. That paper is called Systemic Risk of Pandemic via Novel Pathogens, Coronavirus, a Note. Now, that paper it's a really excellent read. It's only one page, as I say, searingly written in Taleb's inimitable style. His final conclusion is he basically says, while there is a very high probability of humanity surviving a single such pandemic event over a long enough time horizon, there is eventually zero probability of surviving repeated exposures to such events. LOL. So yeah, happy days. You'll see a lot of people compare the coronavirus to the flu because, of course, the flu kills hundreds of thousands of people every year. That is true. But the key difference here is, the coronavirus is more contagious, it's deadlier, it's harder to contain, it chews up intense amounts of medical resources, and it has a longer asymptomatic infection period. And of course, there's no vaccine for this thing at the moment. So if it can't be contained, the worry is that the virus will eventually overwhelm healthcare systems, and that's exactly what happened in Wuhan, of course. So obviously, I am not a medical expert, so don't listen to anything I'm saying. Please do your own research on this. If you are in the US, do not worry. President Trump and Vice President Pence, they are here to help. Yes, a few hours ago, did you see this? Trump has announced that he has appointed Vice President Mike Pence to lead the US response to the coronavirus. Obviously, this is good news, and it's good that Trump is being proactive about this. I don't know if you recall, but back in 2018, Trump and his administration, they dismantled the US government's entire pandemic response chain of command. Why? For no good reason, really, but that's what they did. So yeah, that was good of them. Anyway, not to worry, Trump has brought Mike Pence back on scene. Pence to the rescue. Pence, you may recall, is a man of science who, way back in 2001, Mike said that despite what you might read in the media, smoking does not cause cancer. Smoking was okay, said Mike back in 2001. Now, he's also a very religious man. Now, Mike thinks that his idea of evolution is just a theory, he said, not a scientific fact. And look, not to get political, but I think it's just reassuring to see that President Trump and Mike Pence, these are the people for the job. So do not worry, the pesky virus is all under control. Please go back to work and please keep buying stocks. Don't buy stocks, not financial advice. I think I've said enough. I think we better leave it there. I hope you enjoyed today's show. If you did enjoy the Crypto Conversation, please don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. Please feel free to give us a nice review and 5-star rating in the Apple Podcasts app or on Apple iTunes. That was us. We are done. We are out of here. This was the Crypto Conversation for Brave New Coin. Boom.